Are diamonds at the bottom of the cycle, or do we have further to drop? Paul Zimnisky is an independent diamond industry analyst. Paul, welcome back to Kitco.
Thanks, Michael. Always enjoy talking.
Paul, after the failed BHP takeover, Anglo American, Anglo announced a restructuring of the company, which includes offloading De Beers.
Yeah, I mean, I guess, speaking to De Beers specifically, it's not really a mining company. It's not really a luxury company. It's kind of like a hybrid between the two. It's a really unique company. There aren't, really any comps, so it's difficult to value. That said, it's an opportunity to acquire an instant leading position in one of luxury's most prominent categories. And it's rare, that an asset like this comes up for sale. It just needs the right buyer, and I think that may take some time. I would speculate that De Beers will still be under Anglo a year from now. Perhaps by then industry fundamentals will be more favorable, and it will make a sale or an IPO easier. But I don't think Anglo is gonna give it away on the cheap. As we're on the bottom of the cycle right now.
What is happening with the diamond market, Paul?
So I mean, the last 4 years has really been a wild ride. I would say unprecedented volatility. During the pandemic years and then the aftermath. Just 2 years ago, the industry saw record demand. The trade literally ran out of inventory. So people bought enough diamonds for a while, and now we currently have heightened economic uncertainty globally. That's especially profound in China. Which has been very slow for the diamond industry over the last year, and that's the industry's second largest market. So I would say it's a combination of factors, as it always is. But I think that macro backdrop is what's especially weighing on the industry right now.
Paul, you didn't use the word synthetic. There's been a lot of headlines that synthetics are eating mined diamonds lunch.
That's definitely one of the factors. Maybe to give you some context there, if we go back 10 years, lab diamond jewelry maybe represented 1% of the global market. Today it's approaching 20%. So there's been pretty rapid growth over the last decade. I think supply of lab-grown diamond will far exceed that of natural diamond at some point in the future, and that's because lab diamond, it's a manufactured product, and the more the producers make, the better their economies of scale. Plus, we'll probably see further advancements in production technologies. That said, that dynamic is what's also pressuring prices of lab-grown diamonds. I think longer term, if we're talking about just simple generic lab-grown diamonds that are being marketed as a much cheaper alternative to natural diamonds, I think that very different price point will attract different types of consumers. And for the natural diamond industry, I think a potential big catalyst will be declining lab-grown diamond margins at the retail level, which could incentivize a lot of jewelers to begin prioritizing selling natural diamonds again.
Let's talk about the other giant in the diamond business, and that would be ALROSA, Paul. We've seen a lot of, how would you say, disruptions in commodity markets due to sanctions that have been levied against Russia. But I'm getting the sense that we're not seeing much effect in ALROSA's instance because a lot of companies' diamonds are just going directly to India and China.
I think ALROSA is being affected by the sanctions. They publicly announced in March that they sold the whole month's worth of production to Russia's precious metal and stone reserve, the Gakron. And they don't really want to cut production because it could be politically unpopular to lay off workers. So along with the overall weaker industry conditions currently, I think it's fair to say that they probably have a supply overhang. But yes, I mean a lot of their goods will be sold to the Eastern consumer market, so it's not like there won't be any buyers for their diamonds. But at the end of the day, it's gonna impact the market, it's probably not going to be, as acute as one might think. But I think there will be, bottlenecks in the supply chain, now and again. And I think it's just also important to remember that the sanctions only pertain to medium and larger size diamonds. So the smaller diamonds aren't even technically sanctioned.
How does the supply side look right now, Paul? The typical commodity cycle is that there's underinvestment or years of underinvestment into production and into supply, and then at that point, then you're going to see a sharp uptick in prices for something. I would imagine that there's just not much investment that's going into diamond developers, diamond grassroots.
Yeah, I would say exploration and development is probably at multi-decade lows right now. I think, from a supply standpoint, where we are today, I think we're actually in a sweet spot with diamond supply. This year I'm forecasting production of, say 115 million carats. That compares to, 150 million carats in 2017. I would say the low bound is, say, 100 million carats. We saw that in the 1990s. So again, I think we're kind of in a sweet spot. And with diamonds, you don't want an oversupplied market, but you also want enough core supply that the product, is still available for mainstream distribution, and that there's enough supply to keep it relevant.
You also follow gold, Paul. Is there a parallel between the two? Tech is eating an older incumbent. In the case of gold, Bitcoin has been coming to the fore.
Yeah, I mean, I think at least if we're looking at gold compared to diamonds, gold, has a better track record of being a store of value. And I think that's because it's fungible, it's more liquid, it's easier to price. So if you look in markets like China, gold sales have outperformed diamonds in the last little while. Diamonds, at least lower priced diamonds tend to do best when middle class consumer sentiment is high. So that's a big sensitivity there. But I think it's kind of interesting when we look at gold and just looking at the gold and demand from the jewelry market. This is across the world, not just in China but also in North America. Gold jewelry sales continue to be pretty strong. So even with the higher prices, people are still comfortable buying gold jewelry.
Lastly, Paul, what are some milestones you're watching for in the next 12 months in the diamond sector?
Yeah, I mean, for the natural diamond industry, I'll be watching to see if we, see a pivot in jewelers prioritizing selling natural diamonds over lab-grown diamonds again. And I think the catalyst for that could be declining profitability of selling lab-grown diamonds. Which I think could incentivize jewelers to really push natural diamonds again. And I think that has the potential to be a very positive development for the natural diamond industry. So I'm certainly keeping an eye on that. And then of course, like we spoke about earlier, I'll be keeping an eye on De Beers. I think what it's going to ultimately come down to is, do Anglo shareholders rather a fire sale just to get De Beers off the books, or will they maybe reluctantly hold on to it a little bit longer? And I think the latter is more likely over the next year or so. I think Anglo's priorities right now are divesting the platinum and the coal assets, and I think once that's taken care of, they can kind of go back and look to see where the diamond market is and possibly reassess an exit strategy there. For me, I mean, at the end of the day, I'd like to see De Beers end up in the hands of, someone that, really has longer term ambitions to spend the appropriate amount of money to really grow the industry. I think marketing spend and execution around marketing will really be the key. And I think there's a lot of good years left for the diamond industry if it plays its cards right.
Paul, thank you very much for your time.
Thanks, Michael.
My name is Michael McRae. You're watching Kitco Mining.